Do not make your first payment on your mortgage until you understand this. So when you make your first payment, it's not just principal and interest. If you're buying a house, there's taxes and insurance, which is your escrow account. So what is an escrow account? Your property taxes are gonna come due eventually, and your insurance, the house has to be prepaid for a year for insurance. So what do? They include it in your monthly mortgage payment. Because if you don't pay your property taxes on time, technically, the town, they could foreclose. And the lender wouldn't like that. They lose their financial instrument, the protection into that property, into the equity. So typically when you close, the lender will force you to pay a full year of your insurance and then take a 3-month cushion at closing. And they'll take usually at closing about 6 months of your property taxes. So whenever they're coming due in the future, you wouldn't have made enough monthly payments to pay off that bucket of property taxes. So that's just an expectation for closing costs. But before you make your first payment, make sure you log into the actual portal that shows you the breakdown of principal and interest and then tax and insurance. Because what the lender does at closing when you purchase the home is they give you an estimate. But if your taxes are 20, 30, 40,000 a year, it could be off by a couple $100, maybe even $1,000 a month. So it's super prudent and super important before you make your first mortgage payment on a new purchase to check into the servicing side and see what they're actually going to hold for tax and insurance. Make sure it's correct. Otherwise, you're just spending money for no reason.